everyone, it's Wednesday. No, it's not. It's Thursday. What's you talking about, you old fool? It's Wednesday. It's Thursday, the 7th of August. It's Bank of England Day, and as you can see on the chart next to me there, sterling's continued to recover from the shock we had for the US jobs data on Friday, when we descended into this key. Breached the key 132, and we got as low as the 131.50 zone. Closed higher on Friday, and then we sideways Monday, up a tick yesterday, stronger day. Up a tick Tuesday, stronger day on Wednesday, and we've continued to move higher this morning ahead of an anticipated 25 basis points cut from the Bank of England in the next, the next 15 minutes. That's very much priced in. I think it's like a 96% chance on the options market here in London. I was actually up in the city earlier on this morning. It's such a buzz still. I'm back in my home office here again for this. But yeah, lots going on. It still seems pretty active, lots of people about, lots of meet. I mean, this is just my anecdotal notes, but lots of meetings, lots of people talking business, very quite seriously, even in open offices and coffee shops and what have you. So yeah, it was interesting little visit. I haven't been up for a while. So the big issue with the Bank of England has been, unlike other central banks, have been clearly split about what to do for a number of months. So there's still a bit of a conundrum here in the UK. The data recently hasn't been great, to be honest. It doesn't encourage the broad growth of the economy. So they may need to push, and which is sort of added to the idea that they will go today quite significantly. So 25 basis points cut, bringing it down to 4%. Remember last time we had that big split, a big surprise split, where two extra hawks were looking for a cut. Here today, we are expecting a 7-2 break or a 6-1 break for a cut today. So it could be in unison, and just one dissenter hanging on to rates at this level. Given the sluggishness of the of the UK economy. It's different debate in the United States. The economy is moving forward. We saw with those PMIs earlier in the week, the still best performing economy. And many are still, obviously, following the huge revision of the payrolls on Friday. Many are talking about that's a tipping point, that's a turning point. That often is the case if you look historically when we get these big revisions. But obviously we haven't had this impact of tariffs before, a change of the global trading world thanks to President Trump. It's still, I mean, it's a much higher chance of a cut from the Fed in July than there was this time last week. But whether it actually goes through, there's still plenty of data to come. There's inflation data. So I think it's two lots of inflation data. There's another obviously non-farm payroll data, but obviously the other side of that in the US, I'll just talk about the US in a minute, we'll come back to the UK in a minute as well, was this idea about this crackdown on immigration and migrants in the US, and there seemed to be in a bit of a net balance, so that since January the crackdown looks like there's less people moving in, less people moving out, so there seems to be some sort of balance. So that suggests that perhaps they don't need to be, generating 200,000, 150,000 jobs in the US. Something like 75,000 a month could be equilibrium if this is the case. So it's, chicken and egg situation as ever. But anyway, back to the UK. Sterling, as we saw a minute ago, has recovered here against the dollar. Remember, the dollar's moved down quite significantly. Let's take this to the daily time frame. Nice leg down there. So from this high at we say this all the time, don't we? We were at 138, 2 steps down. So long legs, retrace, long leg down under the key target area 132 we'd been talking about a few weeks ago. From the 135, 134 broke. So nice pips in the bag there. Big bounce here on Friday, courtesy of the jobs, and we've got, as I say, we continue to move higher. Some key areas taken out. That key first fib level. The next level now is the 20-day moving average, which is right on the 134 level now, and also another key fib level from these previous legs. So big resistance at 134 for sterling. See how the Bank of England influence that move today. As I say, we were looking at the hourly chart earlier. We've been long, or the system would have been long from yesterday with this big positive candle here at 11 o'clock. We saw that the weakness on the dollar, and then again additional buying there at 4 o'clock as the London fix came in, and off we went again. And so we're higher again, 133.75 at the moment, 25 pips shy of the key 134 area to the upside. If we look at sterling across the other across its major partners, euro recently got it's been weaker against the stronger euro. If we put the weekly chart here on the on euro pound, it's been rallying since the beginning of June, the euro against sterling through 87 and currently trading 87.25. So the pivot area 84.85 has been pushed out of the market quite significantly, and then you can see this quarter, the last end of show how old this is. The fourth quarter of 23, we were all the way down here. Target zone from May, and this was the 86.70 level here. This was the January 2024 high, and then we declined from that all of 2024 into these lows of 25. So we've recovered from that. We're over 87. So remember, this is the weekly chart. You can see this 24 decline here from that level. There's that high for 2024. And now we move down. And so November 23 high, this 87.67 is the next upside target. Strong run. Down week last week, quite obviously volatile week, courtesy of the tariffs and the politics in the UK as well as in the euro area, but that still remains bid. So here on the daily time frame, that one is also still positive. So sterling weaker against the euro. Here against the Kiwi, it's very much daily time frame, very much a sideways channel-based action, similar with the Aussie, although a bit weaker against the stronger Aussie. So again, it's looping down. It's under its 20-day moving average. Not more important, but more traded on the guppy, the pound yen back to 197 now from the shakeout on Friday. So we had been moving up, so stronger. More to do with a weaker yen than stronger sterling we've seen on the other pairs, but big gain, big shakeout for the yen, or positive gains for the yen on Friday, shook sterling, and we went into 195 on Monday, and here we are bouncing back up. We still yet to breach back over the 50-day moving average, and the 20-day moving average sits at 197.50. The 50-day there at 197 itself. So and you can see that that's the first big breach of this 50-day moving average since the beginning of the spring here. So we were down all the way down here at the beginning of April at 86. So can sterling get back above that? That's against the pound. Pound CAD, we got an open trade on that. It was out of the money. We took it the 5th. Sorry, I thought we'd been at. Yeah, we were out of the money because we got in here and we were out of the money most of yesterday, but we're back in the money there. That's our first target there, just shy of the 20-day moving average at 183.73 for pound CAD. The Swissy 107.84, and again a bit like the other crosses. Sterling better this week from a downward decline, but yet to confirm that we've broken this downtrend. The 20-day moving average, we're over it at the moment. Is all the bad news in for the UK? That's what the market is protecting here. So that one to the upside. Let's go back to the cable pair, and we'll just bring it down to the 5-minute time frame. And actually, let's bring up and see where we are. So that's ticked higher here. at 11:45 ahead of the data in 5 minutes time. So just coming back to the UK again, depends what the split looks like, and how the voting goes. So it's very, very sort of all over the place, really, which is not unlike or not like central banks. So we'll see how he pulls it in. I remember it was we had the big dub on the Bank of England is Mr. Ingro, who's always said, keep rates as they are for a long time. She's been joined by Taylor, and then last month the deputy governor Ramsden joined in as well, and the idea of not of wanting cuts. So we'll see what that looks like. I'm just reading some of the bank comments here. Just Barclays are looking for a 252 break, Morgan 542, 243 for HSBC, Goldman Sachs are saying a bit more consistency, a 162 vote, looking for 3%, 3.5% from Barclays. ING 3.25%. They're looking for again more consistency, 171 split, so a bit more consistency about who's moving here. So quite a big split here. I haven't seen looking at there's 1, 2, 3, 4, 5, 6, 7, 8 banks. I'm just looking at there. It's very unusual for them to be so different. There's only Barclays and Morgan agree with the voting and terminal rate around about February 26 at 3.5%. HSBC is different. Paribas is 2.7. Goldman Sachs 6.1. Deutsche 2.5. Same as JP Morgan 2.5, and Nomura as well. So Nomura, Deutsche, and JP Morgan are all talking about the vote being around about the 2.52, but differing on terminal rates. ING are talking about 3.25 terminal rate, and Deutsche 3.25, and Nomura and Morgan, JP Morgan 3.5. So yeah, it's quite a big old split there. There's nothing from NatWest here. These are Barclays is the only main, and HSBC. So yeah, watch how we go. But as I say, at the moment the market is, as you see here, even on the 5 minute time. So we might look to fade this, or if there isn't a major break here. So remember what we were doing yesterday when we were trading the open. That's an upside target 33.80, and let's see what is said by the Bank of England and their members. Elsewhere, have I got time to? No, I'll just leave sterling on for the moment. We'll look at gold and crypto and the indexes, because we took two long positions last night on the S&P 500 and the Nasdaq, and some other crosses as well. So I say this: the fact that the market is expecting a 25 basis points cut means that this direction maybe getting manipulated. But let's see what happens. Some good earnings numbers again last night over in the US, but it's all about tariff numbers, and we'll come to that in a minute once the Bank of England is out of the way. So here we are. Are we going to fade this 133.80 area? Let's see how we get on, guys. If there's anything else you want to have a look at, let me know. Keaton's saying, what's he saying? He's just saying hello, I think. Whoops, lost you. Keaton Gupta, good afternoon, good evening. So there we go. The rate has come out. We've not only have we spiked through the 33.80 zone, we've spiked to 134. So clearly around 134, there'll be stops, there'll be target levels taken out. So we are stronger. Sterling moving higher on the announcement, which the announcement's obviously gone for 25 basis points. I would guess it's the voting split. Let me just check if the vote has come through yet, and we'll bring up the calendar. Actually, let's refresh our calendar because it has the details on, doesn't it? There we are. So let's see what this rate cut split looks like. That's probably what's moved. It suggests there's more unison on Steering me. Oh, anyway, that's didn't want all this, but anyway, it's horrible. Where are we? Thursday. Oh, right. So it's very good, very interesting. It's unchanged. 416. 1-6 last time. It's 4-1. It's 5 have voted for a cut. Nobody's obviously voted for a hike, and 3 have remained. So Dringer, Ramsden, and Taylor remain in the no cut route. So it's 5-3. I'm just wondering. I'm just going to have a look at that. The bank call 5-2-2-2-5-5. So Deutsche, Nomura, Barclays, JP Morgan called the 5s. Goldman and Barry Bar were looking for more. Unison, that hasn't happened. So we've still got a very split Bank of England, and 4-6 as well. The unchanged 4 were voting for no change at all. So interesting call there from the out in Leadenhall Street. So sterling has rallied significantly, 134.20 on the some of the charts. There we go. So that's long. That's holding up. So a cut of rates has come in, and it's the fact that we have this significant split on the committee will have surprised markets somewhat. So we've got a very strong move for sterling. The details are just coming through here. They're looking at inflation spiking again. So sterling's ticked up on that, unsurprisingly. Let me just get my feed going here. So the details of the voting here. So the bank rate cut unchanged, it's at 5-4 versus the 7-2. Green, Lombardi, Mann, Pill voted to keep rates unchanged. So 1, 2, 3, 4 wanted to keep them at 4.25. Taylor voted to cut by 50 basis points in the first round, but changed it to 25 basis in the second round to avoid a hold. It's the first time ever the bank has had 2 rounds of voting to reach a majority decision on the bank rate. So there we go. So that explains the big surprise move in sterling. As I was saying beforehand, it's one of the most divided central bank committees, and that was demonstrated ably there in that announcement. So what's caused the fuss is they've had to have 2 rounds of voting to get to the 25 basis point cut. It was down to Taylor wanting a full 50 basis points cut in interest rates to 3.75 from 4.25. He declined, or he reduced his required expectations to 25 basis points. So there wasn't a hold. They didn't actually change rates. I'm having market price thing. That would have been an even bigger surprise to the market. The other key thing was 1, 2, 3, 4 from the chief economist, Mr. Pill, to the latest edition, Megan Green, all wanted to actually keep rates unchanged. So that's interesting. It'll be a very tetchy press conference for Andrew Bailey. Not the greatest fan of Andrew Bailey and his forward guidance, and certainly the press aren't here in the UK. So, details to follow. So here we go. The path of disinflation is underlying domestic price, blah, blah, blah. Yeah, that's nothing. Pay growth remains elevated but declined. Yeah, we've seen that. Vigilant about the extent to which easing paper. There's nothing here. Underlying UK GBP growth remains subdued, yet consistent with the continued gradual loosening. Okay. Gradual and careful approach remains appropriate. So they've left the gradual, data-dependent, careful approach in. These are the key points here. The restrictiveness of monetary policy has fallen as bank rate has been reduced. Okay, so they're talking about maybe easing further. The timing and pace of future reductions in the restrictiveness of policy will depend on the extent to which underlying disinflationary pressures continue to ease, i.e. prices are still going up, unfortunately. That's a great central bank phrase, to which the underlying disinflationary pressures continue to ease, i.e. prices are still going up for your average punter in the UK. So hence, we got this rally in sterling back over 134, and that would be, I know a lot of you trade these major announcements, but let's just go back to the 2-minute one. That, you were out here at 50. You weren't allowed to trade here at 58. Those of you with a standard account, but that's still, I'd be buying that still over 134 if we hold it. So that's where you can't buy. We faded virtually straight away here at 02. We came down, went down again. So you could have got in at 134.05, and you're already 10 pips in the good. Obviously, you would have perhaps caught the bottom like that. But here, so I mean, even if you're trading in news, would you have sold up here? Well, if you've sold up here, yeah, you might have got this bit here. But this looks positive. Huge breakout, big surprise, first time ever. Is the headline that the Bank of England Bank of England Monetary Policy Committee, the MPC, has had to have 2 rounds of voting. These are normally quite convivial, although obviously economists have and experts have their strong opinions and discuss accordingly. But for not to have a consistent vote first round, that's quite a surprise. So Taylor has held to his guns, but being obviously not wanting to move things too aggressively, has moved down. So right, I've actually got into the site now. So it's been substantial disinflation over the last 2.5 years. I mean, voted by a majority of 5-4. That's a big surprise, especially when, as you say, we were looking for 7-1 or 6-2. It's a big split. The 2 serious camps for the Bank of England there. So let's see what comes up on that one. So sterling continued to hold that bid, and I'd say if you'd you got your standard account, you could have entered here, and you're sort of in the money, 134.13. Certainly, that's where I would be to the upside there on that sterling. So let's have a look. I'm guessing the other moves would have been similar. So euro turned around quite significantly. There we are, 86.90. So we've given up 87 on that data. And actually set this up to the high time. So that's a massive move. And we've been as high as 87, where we were 87.60 yesterday. Sorry, not yesterday, earlier in later in July, and we've come back down under the key 87 level for euro pound. Kiwi rallying up. That's is that a 2 week? I can't remember if that's still open. No, that's July. That's not still open. Aussie pound up to 2.05 pound yen. There we go. Back smacking through 197.75 now. So off and running, as we said, for pound yen, pound CAD. Was that one we've got open? Yeah. So that's our. That is. I knew we had one open. So half 80% of our position will have been closed. That's the new rules I've got trading these 2 target systems. So 80% of the position closed here. And 20% here, and while we're here, I'll just pull the stop loss up really to the 20-hour moving average, because we are very much in the money. So I'll move the stop loss up there on that pound CAD, having taken 80% of the risk off the market, and that's bid to the upside. Pound Swissy, similar move to the upside, or up to 1.0831. So one would assume that the FTSE has taken a bit of a clatter. It was heading down to 9100 earlier today anyway. So this is obviously breached that, a bit like the Euros breached that 87. FTSE has breached the 9100 level on that data. The reason that sterling and FTSE are in inverse basically is one's going up, the other's going down typically, and vice versa. As one's going down, one's going up. Is that 70? So I think last time I looked at it, was something like 78% of FTSE 100 companies. That is, the 100 biggest companies in the UK. A lot of them, 70 odd percent of them, earn their earnings typically in dollars, but not in sterling mostly, and therefore a stronger dollar. A stronger sterling would weaken the earnings of the FTSE 100 companies, so therefore the FTSE goes down and sterling goes up. Typically, I mean, it's not exactly all the time correlated that strongly and doesn't go in sequence, but we can see that sequence. If we go back to the 2-minute one on this, won't be as a movie as the sterling was. Yeah, so there we are. A big move down for the FTSE under 100, but it was on track anyway. If we got the daily here for the FTSE and see, we sort of rolled over. We've been 10, 12 days, I think it is, over the 9,100 level. It's still big support is there at 9,050, where the 21-day EMA is. Congestion high is good, but we break from these congestion areas, these consolidation areas, so it may be a break to the downside if 9,050 breaks for the FTSE. So any of you trading the FTSE, other than me, I'm sure there are many of you, watch that level. Can we recoup 9,100 later today as things settle? But the shock, again, markets hate shock. First time we've had this 2 rounds of voting, and the voting was very, very close. 5-4. Quite a big shock to many participants, including me, to be honest. I thought we would have been a better number. Oh, I've just flicked back to my internet feed for Bloomberg TV, and I've Eli Lilly, which has been doing very, very well. I've obviously missed on it's weight loss pill, wasn't it? Yeah, so it's down 12%. Its earnings are down 12% pre-market in the US. So the FTSE is down. Let's have a look at the other indices while we're here. The Dow is poking to the upside here. Sorry, I need the daily to get my perspective. So there we had that decline, didn't we, into the 50, and now it's come up. And today, is that today or yesterday? That's yesterday. Oh no, today it's actually higher. So we've actually back over the 50-day and the 20-day moving average on the more certain in tariff rate. It's in now. It's starting to take effect. Average rate for countries is around 15%. Obviously, it's much higher for some. Switzerland is a case in point here in Europe. 39% for the Swiss. Big gold processor and exporter. Although gold is not actually part of the tariffs, so it's more to do with the pharma exports and looking to get massive tariffs on them up to 250%. He talked about, or he confirmed 100%. He's talked about 100% tariffs on semiconductors. So not only are they tariffing individual countries, they're tariffing sectors as well. So the pharmaceutical and the chip sector was very much in focus yesterday. 100% tariffs on semiconductors made abroad, imported into the United States. And then he said, another great Trump caveat, well, if you make it in the US, that's what we want. And there obviously won't be any tariffs on there. So companies like Apple, TSMC have all rallied today on the fact that they are talking about big investments in the US, which is sort of what Trump wanted. But, it's the and NVIDIA as well. Jason Wang and Tim Cook both had the ear of the president yesterday, and both are talking about increasing investments in the United States, which again is what Trump wanted. But ultimately, it's going to be the US business. It is the US business and the US consumer that's going to pay for these tariffs ultimately. Yes, they're collecting them at the point of entry, but that's got to feed through at some point. Companies can't absorb all these huge extra costs. They can't re-engineer quickly in the US. Some are holding out. And again, we'll see where we go. Again, yesterday played hardball with Russia. That bromance with Putin seems well and truly over for now. You know how he flips. So the decline in oil has continued into the bottom end of our channel yesterday, just spiking out under $65. So that move down is still in place. On China, on India, an extra 25% for India because they're buying Russian oil. India said they're not going to change that. Russia doesn't look like any sign of backing down anytime soon. But again, the flip side, Trump and Putin are due to meet next week. Apparently, how much of all of this is actually nailed on and agreed? The Kremlin have said that there's nothing. There's nothing out of the White House on that, but he's talking about more tariffs. He loves them, and he's talking more tariffs yesterday. And numbers, eye-watering numbers. I say 250% on pharmaceuticals. And the other thing that I was reading over the weekend as well, he's got some. He had he's all of this has actually got to go through the process of the Senate and the House in the United States. But I was reading he'd got some amiable senators to sign off. He has the ability as one of his executive orders to be able to sort of wager these tariffs up to 500%. I was reading at the weekend. I was looking at the numbers. So he's got the presidential authority from the back end of the Senate, which is why he's so keen to keep it all Republican, of up to 500%. So even at 250% on pharma, that could go potentially, rhetorically, much higher. Obviously, the detail has always been much, much less significant. It's like the Swiss situation, relatively small economy in global terms, but 39%, particularly on the chocolate watches and all the rest of it. But gold, one of the major exports from Switzerland, is being exempt. And it's a bit like 35% also on Canada. That was a big headline, wasn't it, a few weeks ago? But obviously, Canada, Mexico, and the US have got this North America trade agreement, and a lot of the goods within that are exempt. So how much of the 35% tariff is going to apply to Canadian exports? Again, devil is all in the detail, but they're now starting to pay them. So the inflation impact is coming from now onwards, basically. So from Liberation Day and the worry of these massive numbers and uncertainty of the beginning of April, the market has priced all of that in. We've recovered. Certainly, let's use the stock market as an example. We've recovered. Sorry. The S&P. We've recovered significantly, obviously, and then gone higher than from when we were back here in February, and pushed all-time highs during this late summertime. So, and again, August looks relatively good, simply because the second quarter numbers have been as good, if not better than many anticipated. Still some significant numbers to come in. And then we have got some clarity on the actual tariff numbers and the numbers that are going to get paid. So it's not as bad as obviously was anticipated, and the numbers perhaps may not be as bad. So the question remains how inflationary this extension of the debt that the US is taking on with this tariff regime, this termination of the globalization. And see how heavy these numbers are, and see what India still talks, Switzerland both still talk, but India had 25%, and he's got this additional 25% for buying US oil. But if he's going to be even-handed about that, the biggest market for Russian oil, so I say Indian oil, I mean Russian oil, the biggest market for Russian oil is obviously the Chinese, and there's nothing there. There's another. They've got a deadline next week as well. So it's all very much in the mix. There's all sorts going on, but the trends remain in place. Stock markets continue to move higher. The bang when it comes could be quite significant, like we had in the decline we had in in the beginning of April. So be careful. Keep your stop losses at reasonable levels, and don't have all your eggs in one basket. But stock markets so far in the summer have continued to move higher, and don't be surprised if we get to all-time highs in this normal quiet month that is August, because when the bang comes, it could be quite significant. So let's have a look elsewhere. Crypto and Bitcoin itself continues to move higher this week from the support last week we had on the 50-day moving average. And the key news for me today is that Bitcoin is back over its 20-day moving average. See what this looks like tonight. There's lots of chatter around Ethereum. Tom Lee, a major player or analyst and investor in the US, and he's on all the US business channels. Actually, I haven't seen him on Bloomberg for a while, but he might have a contract with CNBC or something. But he talked about Ethereum being the 2025 being Ethereum's 2017. 2017 was a key. I don't know if I can find it actually. A key year. I'm sure those of you that have been invested in crypto for a while will know what I'm talking about. A key year, a blowout year for. Sorry, didn't mean to do that. I need that down there. Let me just find it. Well, it's running slow mode. I put it on the Discord group, didn't I? So let's get rid of that. That's what I'm doing. Bring in Discord and we'll show it there. A key blowout year for Bitcoin. I think I'll put it on there. There we are. This is a group here. Can you see that? Hopefully you can see that. There we are. If I make myself a wee bit smaller, you might be able to see that. It doesn't make it any bigger, does it? Not make it bigger. Not really. It's bigger that way. Anyway, if you can't read that, what I was saying today in 2017, I've highlighted this on Bitcoin. Bitcoin went through $3,000 for the first time. It had gone through $2,000 in May and $1,000 in January. So January to May, it went from 1,000 to 2,000. May to August, it went from 2,000 to 3,000. And here we are talking about 120,000. And it was a stellar August that year, 2027 for Bitcoin. It went to 4,000 by middle of the month and 5,000 during September into October. And by the end of the year, even before the end of the year, November, it was at 7,000. So it had gone from under $1,000 to over $7,000 during 2017. I mean, do your own maths on that. It's a huge, stellar year for it. And many are now talking about Bitcoin, Ethereum. Well, I've got Ethereum. Here we are. Having a stellar 2025, and you see here on the daily time frame, unlike Bitcoin, we were one day under the 20-day moving average, and we've been over it for the last week. So moving higher again, Ethereum, and you can see that 8,800 levels being breached, and the this all-time high we had at the end of last year at $4,000 for Ethereum is very much in focus. It's been a very strong led rally for Ethereum during the summer, during the July, once it broke out again. Classic breakout. Add to it here, and again, this strategy would have gone. I'm not trading this, but that strategy would have gone long then on the 8th, and then it would have added as it's gone through this new high peak there to its position. Then it would have added there. Based on the size of the candle dragging the stop loss up, may have added on that one as well, and it's cooled, and so some of the positions from down here would have been taken out as this is rotated back down through the 20-day moving average. But that would have again, the system, my crypto system would have added there on the 4th of August. If that had been running on, it's not actually running. I don't trade that Ethereum, but that's how that would have happened as a trend following tactic. Stop loss will be down here, still conservatively, maybe at the 20-day moving average. Now it looks a bit too close, so probably around that. There we are. It'd have been, there we are, right through there. 3377. I like these numbers, don't I? 3377, where my stop loss would be on Ethereum on a daily basis. If any of you are trading Ethereum, my friends. So where are we? Gold, I know is one of your major trading assets, my friend, but not a lot. I can't get excited about gold at the moment, guys. It's sort of sideways action. It's biased positive, let's say that. It's above its 20-day moving average. It obviously benefited significantly from the blowout non-farm payroll surprise. We had been under 3,300, but clearly buyers there. It should, that should have. I would have argued that should have lifted it even more. To be honest, the gold market, there's some significant buys. But again, technically, it's looking relatively positive. We're above the 50 and the 20-day moving average, and it's holding it. Not strong candles, but there could be a blowout. We've had a cross here on the MACD and the signal line. We turned to green here on Tuesday on the MACD histogram. RSI remains very benign at 55. You'd like to see that a bit more of an angle. So I'm not selling it. I'm certainly not selling it, but I wouldn't be jumping in all guns go blazing. But let's see how we finish this first full trading week of August tomorrow for the gold market. So that's we are. Anybody want anything other assets? I'll come back to sterling before we go. I'll have a quick look at where we were. We have quite a few open trades, didn't we, last night? I need to update the July account. I said I would. So Aussie CAD, Nasdaq, and S&P 500. So let's have a look at the ones we had open from last night. So let's just start with the indexes. So the S&P 500 we bought yesterday here, and it's in the money. Our initial target is up here. See how that goes. Our stop loss remains there at 6248. The Nasdaq also we bought last night, went long last night. Our stop loss is a bit tighter on the Nasdaq there, just shy of the 20-day moving average, and our target is up around these high levels, so we could get there quite quickly and take some off the table on that one. So along Nasdaq and S&P 500. The others were all crossed, I think. Well, the Aussie CAD. Oh no, hang on a minute. And that's not target from the 23rd. That wasn't. That's still in the money because there's a stop loss there. Did I move that stop loss up? I think I'd have to check that if that's still open. That might have been. No, it wasn't stopped out on the Friday, or was it? Again, I'll have to check that. That's either been stopped out on Friday or it's hit target today. If that is the target, I'll have to check the numbers on that. But I knew Aussie CAD was open. What's the other one that was still open? Oh no, Aussie CAD was from last night. Oh no, it was it was Pound CAD that was open. What was Aussie CAD open? Is that closer? Isn't it? Short Aussie CAD. I'll have to check that. Yeah, so I was short Aussie CAD and Aussie yen. I haven't updated any of these, have I? Oh dear. Right. Sorry. Apologies. So the long was Aussie CAD from last night. That must have hit target. Oh, there it is. The 20th. Oh. I'll have to drill down and see what that. So that looks like that was that says the 30th, not the 27th. That says 20th. Oh, perhaps that number. I shouldn't put that. The numbers confuse me. So was that? Oh, anyway. So we gone. That's actually long, isn't it? That's right. That's what we just said. We went long last night, and that has hit target. Aussie CAD has hit target. 80% of that target is off the table for this trade, and I'm not. I'll have to check my updates on the other one, the short one. I think it was closed. And I think I closed everything out for the end of the month, didn't I? Oh, brain's gone to fuzz. So they're all, and then the other two were the Kiwi crosses, Kiwi Swiss and Kiwi dollar. So from last night. So if we just put in New Zealand, Kiwi Swiss, that was there we are. That was last night. We got in here, and it's just in just shy of the initial target there. And I must have had these up here that I didn't see about, so let me just get rid of those because it's confusing the hell out. It takes a long time to put them on this the Trade Locker platform, but and then the other one was the major was Kiwi, which we were also long, weren't we? There we are. It's got within a smidge of targets, come down a bit there, having run to the 20-day moving average. So I might be looking to close that one out just on that game. But it is an end of day one, so let's see how that goes if we get over that 20-day moving average from entry here. But again, that's in the money. So unusually, all the open positions are in the money. And I just need to check when these were closed out, and pound CAD obviously hit its target, as we said, on the pound news this morning. So let me just finish with the main news of the day. And sterling getting a big old rise from the surprise vote split, really, is what's caused sterling to move. Interesting, right in its 20-day moving average at the moment. So if we look at the when are we? 15 minutes. Let's do the 5-minute chart. What a rally we've had. It's faded somewhat, but we're still holding 134. A bit of a tweezer top at 134.27. So a few pips to the downside, 10 pips down to the side, but still bid here on the 5-minute time frame. 2 minutes if you really want to trade the news and keep out of the money. You're still in the money, but that would have closed out because we've rotated down into the 20 and then bounced again. That might be looking to buy again on this candle. It's bounced off the 20. The 5 and the 9 are crossing again. So possible upside again. But interestingly there, for that 10 minutes, we couldn't get over 134.28. 134.30 was a bit of a stretch, wasn't it? 134.30 is where the sellers have come in. 134.30. See what's happened there on that 2-minute time frame. So we're now at 134.12. So we'll see where that finishes if you're trading that on that short-term 2-minute time frame. So, my friends, take care. Tomorrow, Friday, we got Canadian jobs. There's still lots and lots of data to come today. It's Thursday, remember. So, in an hour, we have the key, or it's becoming key, given what happened with non-farm payrolls and the revisions yesterday. These initial job claims, which continue to move to the downside. But again, that could be to do with the rebalancing of the migration and immigration numbers as well. I'm off to listen to the I'm going to say ever erudite. I'm off to listen to Mr. Bailey and his press conference, which I think could get quite sparky. So I'll update you on that later on. But he's just started speaking now, and I'm going to go off and watch Mr. Bailey's press conference in a minute. Okay, he's just starting to talk. Okay. Right, take care, everyone. See you tomorrow for the Canadian jobs. Be good. If you can't be good, be safe, as my old mum used to say. And Canadian jobs tomorrow. All right, all the best, everyone. Take care. Bye-bye.